Welcome to Build Like Billionaires. In this video, we will learn a secret investing strategy that you can use for 2022, which will enable you to earn high-paying dividends from the stock market. The best part, this method is free. Before we learn about the strategy that can potentially make you millions, make sure to subscribe to the channel so you don't miss on any similar videos. Alrighty, the secret to making profitable investments is to follow Warren Buffett's investment checklist. Warren Buffett is among the greatest investors of all time, and not to mention a millionaire, and his strategies are the best to follow if you want to continue making money long term. It doesn't matter if you're new to investing or you're an experienced investor. Warren Buffett's investing strategies are convenient for everyone. Now, let's dive straight into the investments do's and don'ts for 2022. When it comes to investing, Buffett has an evergreen approach, which we can consider as a checklist to guide us in our investing journey. The Buffett checklist consists of 4 factors, namely, number 1, understanding the business, number 2, looking for durable competitive advantage, number 3, companies with talented management and high integrity, number 4, ensuring a margin of safety. The above checklist is also known as the Buffett/Munger checklist. Charlie Munger is Warren Buffett's longtime business partner, and just like Warren Buffett, Charlie is very knowledgeable when it comes to investing. Together, both have taken the company, Berkshire Hathaway, to the pinnacle of success, such that the returns of the company are double that of the S&P 500. Now, let's dive into each factor so that you get a better understanding of what they mean. Number 1, understanding the business. This means that before investing in any stock or company, you should do your research first. You should not buy stocks blindly just because everyone is buying it. Let's hear more about this from Mr. Buffett himself.
And look at thousands of companies day after day, and only when I see something I understand and when I like the price at which it's selling, then if I swing, if I hit it fine.
2. Looking for durable competitive advantage. A durable competitive advantage is what Mr. Buffett's business partner, Charlie Munger, refers to as a moat. A simple example to understand what a moat is would be to take the case of Apple products. Apple is a well-known brand. Each year, Apple keeps increasing the prices of its products, and people keep on buying them despite the high price. They do not switch to other brands. This is what we refer to as a durable competitive advantage. Even when the prices are high, the company does not need to reduce its prices to get buyers. Nor does it have to worry that customers are going to switch to other brands. So, the company or stock that you choose to invest in should have a durable competitive advantage. When you perform your research during the understanding the business phase of your checklist, you will easily come across companies or stocks which act as moats. And then, these are the investments you should go for. Number 3, companies with talented management and high integrity. Here, management refers to the company's CEO and board of directors and other executives. So, management of the company should be in good hands, as this will ensure the company's success, which in turn will enable you to get the best investment returns. Now, how to know if the company's management is talented? Again, some research is required here too. You should take a look at the company's accomplishments compared to its competitors and how they're allocating capital over time. Number 4, ensuring a margin of safety.
Finally, no matter how wonderful it is, it's not worth an infinite price. So we have to have a price that makes sense and gives a margin of safety considering the natural vicissitudes of life.
This means that you need to pay attention if you're paying a fair price and you're not just burning money. These 4 factors conclude our checklist, and make sure your future investments satisfy these factors. At this point, I know you must be feeling that all this is too much work, but the truth is, if you want to make profitable investments, you need to follow these strategies. Now, there are certain pitfalls that investors need to be aware of in 2022. These are, number 1, overvalued stock markets, number 2, high inflation, and number 3, interest rate hikes. Let's take a look at each of these. Number 1, dealing with overvalued stocks. This can be overcome by using factor number 4 of our investing checklist, which is ensuring a safety margin. We must pay a fair price for the stock that we want to buy, and if the current price is too expensive, we simply wait. We wait for an opportunity to come so we can buy our desired stock at a fair price. The waiting game might seem like a bummer, but this is what Mr. Warren Buffett does, and as you know, he's among the best investors that you can learn from. Also, at this point, Mr. Buffett offers another alternative. If you do not want to play the waiting game, you can choose the route of passive investing. What is passive investing, you ask? Passive investing is essentially a long-term investment that you make. You buy and hold a stock for long periods of time and do minimal, if any, trades. Index investing is a common form of passive investing. If you want to know more about index investing, drop a comment below and I will come up with a video which covers index investing. Basically, for now, just think of index investing as you just buying an index fund and then you don't look at it again for a very long time. Passive investors do not worry about the market or how charts are doing. They just follow the strategy, irrespective of what the headlines are saying. Our challenge number 2 for 2022 is inflation. It is no secret that inflation is on the rise. So what do we do now? Again, our investing checklist comes to the rescue. In such a case, we consider factor number 2 of our checklist, which is looking for companies which have a durable competitive advantage, that is, they act as moats. Again, Apple is a good example of a moat. No matter how much Apple keeps increasing its prices, people will still continue to buy their products. So make sure to invest in companies which can act as moat. The final threat to investors in 2022 is high interest rates. It is speculated that just like inflation, interest rates too will experience a hike. So how do we invest in such a scenario? At this stage, you simply have to trust the strategies you're following, because the stock market is unpredictable and no one knows for sure what can happen to the market. This is why it is necessary that you follow the strategies listed in the checklist that we talked about in the beginning of the video, so you can keep calm when others are worrying. If you want, put the checklist on an Excel file so that whenever you want to buy stocks and you do your research, you can decide if your investment is going to be worth it or if you will just be burning money. To this day, Mr. Buffett consults his investing checklist before making any decision, and as we all know, he's a rich man. So if you want to become rich by investing in the stock market, follow Warren Buffett's strategies and you can be the next Warren Buffett. On that note, this is all for today's video. If you did get great value from the video, do not forget to smash that like button and subscribe to the channel so you can always make wise decisions when it comes to investing. Until next time, take care.